So, good afternoon, students. And how are you this afternoon? I know you are tired, but we need to carry on until the end. So, this is our last online tax lecture, the provisional tax on companies. We did individuals. Now we are ending with companies. And this week will be our end of our online and face-to-face lecturers. And I'm of the opinion that you need to take advantage of this. You must just come in numbers, but I can see the numbers, they are not satisfactory. However, we will continue. It's provisional tax on companies. We have learned what is provisional tax. And we said at the end of this topic, you must be able to complete and submit the IRP6 return, of which is a provisional tax return. And again, to be able to calculate what need to be calculated in terms of the first, the second, the third provisional tax payment for you to be able to submit the full information to SARS. And we said, who must be registered as a provisional taxpayer? We've explained to say any person who is not earning a remuneration other than an income, or any person who earn income other than a remuneration, that person cannot be classified as a provisional taxpayer. A provisional taxpayer is someone who earns, for example, rental income, as long as you are trading, whether it's in shares or any other things, then you'll become a provisional taxpayer, and of which you are required to register within 21 business days for you to become a provisional taxpayers. And we explain what is a provisional tax payment. It is an advance payment in respect of normal tax payable for the year. Yes, why is an advance? Because SARS is of the view that most of the business that are struggling are SMEs, small medium enterprises, of which if they do have a huge debt in their books, most of them they are unable to pay that debt. That's why started saying pay this huge debt into compulsory payments to uplift that burden on SMEs. That's why we've got the first and the second, which are compulsory. However, the third provisional tax is not compulsory. It depends on what arises under the first provisional and the second provisional. If there is any understatement or there is outstanding amount that need to be paid, that amount must be paid in the form of the submission of the third provisional tax payment, of which the payment is only allowed before the end of September. You need to make that payment, otherwise you are going to incur penalties and interests. Then again, as we've already said, what is a provisional tax payment? We've got some exemptions. Let me just look again. There are some exemptions, guys. Exemptions, or we'll look to that exemption in the next slide. Here is still explaining what is the provisional tax, of which we have explained. A company automatically is a provisional taxpayer. A person notified by a commissioner that he is a provisional taxpayer. And this one, I've explained much on this one, because most of the people or most of the business, they are not aware that they are provisional taxpayers. Only if when they are notified by SARS. How? When the banks notify SARS that this particular individual supposed to register as a provisional taxpayer. That's why it says any person notified by the commissioner that he is a provisional taxpayer. And a remuneration again has been defined. And you'll find this definition in paragraph 1 of the fourth schedule. It explains everything. It includes payments and amounts payable in case of otherwise, whether or not for service rendered, and includes salary, wages, leave pay, bonuses, commissions. Those form part of remuneration. And if you are earning a remuneration, therefore, you cannot be classified as a provisional taxpayer. Then here is some exemption. You can remember that in terms of provisional tax individuals, there are also some exemptions, and the same applies to companies. There are some exemptions. For example, any tax exempt public benefit organization, PBO, any tax exempt recreational club, and a body corporate. Let me just explain this one by one so that you can understand what do we mean by PBO. It says any tax exempt because for it to be tax exempt, it must be registered and approved by SARS under Section 30 of the Income Tax Act for it to qualify these exemptions. And the issue is, what is a public benefit organization? This is a non-profit entity established to carry out activities that benefit the public in general or a specific sector of the community. For example, education, wealth, and welfare. We have seen most of these things go around Soweto. I've seen in Soweto the educational hub, of which there's a group of graduates. They form a group, they form a PBO whereby they assist grade 12 in terms of physical science, in terms of mathematics. And again, the the Nelson Mandela Foundation, that is a public benefit organization. You can relate with that, which focuses on social justice and community development initiatives for the public good or for the good of the public. What the purpose of PB? It is for the assist, to assist the public, to benefit the public. And again, they are talking about a recreational club. What is a recreational club? It's an association or organization formed mainly to provide social, recreational, or sporting facilities or activities for its members. For example, I know Linesia, they've got a huge recreational club. It's a country club. It's a golf. Is it a yes? It's a golf whereby it offers sporting and social activities such as golf, tennis, netball, volleyball, and dining facilities to its members. That is the aim or the objectives of recreational clubs. That's why they say tax exempt, meaning that for it to be exempt, it must be registered under Section 30 of the Income Tax Act. And a body corporate. What is a body corporate? It's a legal entity automatically created when a property is developed under sectional title, such as an apartment, complex, or townhouse development. It is responsible for managing and maintaining the common property, enforcing the rules, and collecting levies from owners to cover shared expenses. I've seen it in most of the apartments where a body corporate is being formed just to make sure that the levies are being paid and the estate or the environment is clean. If there's any, maybe the lights are not working, they make sure that they fix those lights, because whatever amount the owners pay, it must be to assist that particular area or the estate. Then again, we've already explained this. Then now is what we've explained last week. When should a person register as a provisional taxpayer? It says 21 business days. Students, I'm saying within 21 business days, not 21 calendar days. 21 business days, meaning it excludes holidays and weekends. And there are two compulsory, of which is the first and second. And it says the first is payable within 6 months, meaning that the start date is on the 1st of March until the 31st of August. That is for the first provisional tax payment, the 6 months. The second payment is from September until February. Whereas the third provisional, it must be paid until the 30th of September. It says it's not compulsory. A provisional tax return is not required for the third provisional tax payment if the first and the second provisional tax payments are covered the actual tax payable for the year of assessment, meaning that the amount of payment under the first and the second, when you combine them, they must be the same amount with the annual financial statement. They must be the same amount, because the first payment and the second payment, this is the amount that has been taken from the annual financial statement, meaning that they must be the same. If they're not the same, there must be adjustment that must be done somewhere. That's why the act says you can now be allowed to submit the third provisional tax payment. Then what happens if you fails to submit? Anyway, if you've got an account at any shops, if you fail to pay at the specific or the agreed time, then you'll be liable for interest or penalties. In terms of SARS, you'll be liable for 10% for late payment. And again, the prescribed interest rate of 7% per annum. Why is it prescribed? Because it has been gazetted. It is there in the government gazette that the prescribed interest rate for either late submission or late payment is 7%, which this is determined by the Minister of Finance. The most interesting part, of which by now we know because we have dealt with under individuals, the provisional tax payment, this is a summary of which it says the first provisional is paid within 6 months of the year of assessment. The second provisional by not later than the end of the year of assessment. And the third provisional tax within 7 months after the year of assessment. Within 6 months after year of assessment, meaning that from March to September. Only if a top-up payment is necessary. That's why the third provisional tax, they call it a top-up payment or an additional payment if it is necessary. Let's see the steps. And this is the same as individuals because they are all under the first provisional. However, in terms of companies, we don't recognize any rebates, any medical credits, we don't use the individual's tax table. We use the company tax rate, of which is 27%. You take the basic amount, calculate the tax on the basic amount, divide by 2, and now comes to the first provisional tax payment. Can you see, guys? Under the companies is very easy because once you have identified your basic amount, the tax is 27%. And you divide that by 2 because we are doing it for the first 6 months. Remember, basic amount is a yearly event. The tax is a yearly event. That's why we need to divide by 2 to cater for the first 6 months. What I've said last week, it says the first provisional is based on the basic amount. And if the basic amount is not given, then you need to calculate when the basic amount has been received. Then it will tell you whether the assessment is received 14 days before the due date or after 14 days before the due date. And you know what to do. If the assessment is received less than 14 days before the due date, then you cannot use that year's basic amount. You need to use the previous year and 8% for the years going forward. And we explain the reason why we have to 8% is because we don't want to underestimate our basic amount. It's what we have said. The reason why we include 8% is because we don't want to understate our basic amount. Remember, when we apply 8%, meaning that those amounts are not actual figures, they are estimates, but we have to borrow it somewhere so that that amount can be used to calculate the 8% for years going forward. We'll talk about the basic amount or the 14 and the 18-month rule in the next slide. Then the question is, what is the basic amount? The basic amount is the most recent assessment received from SARS. It must be assessed and received. If it is only assessed and not received, you cannot use that amount because you don't know how much are you going to use because it is not received. That's why it must be assessed and received so that you know come next year when we have to file provisional tax return, you have got the basic amount because you have received the latest one. Here in this case, an example, the basic amount is 100,000. The tax is 27%. Always it's a flat rate for companies. The tax is 27%. Guys, not 28%, it's 27% for all the companies. Then you get to 27,000. 27,000 divided by 2. Then meaning that the first provisional is 13,500. We need to divide by 2 because we are only looking at the first payment, of which is within 6 months, from March to August. Then here we're explaining the basic amount and the 14 days and 18-month rule. It says the basic amount is the taxable income from the most recent assessment received from SARS. That's why I said it must be received. If it is assessed but not received, you cannot use that assessment. It must be assessed and received. If an assessment is received less than 14 days before the provisional payment is made, then the taxable income reflected in that assessment cannot be used as the basic amount. It's what I've said to you, meaning that you need to use the previous year. Let's just see what do they mean less than 14 days because it must be measured by days. Example, we know that the first payment is due on the 31st of August, but this assessment was received on the 18th of August. And from the 18th to the 31st is 21 days, is 12 days. Then meaning that it has been received less than 14 days before the due date. Therefore, that assessment cannot be received. Where the estimate must be made more than 18 months after the end of the latest prior year of assessment that has been assessed in relation to the estimate, the basic amount must be increased by 8%. That's why it is estimate. Once it's an estimate, you need to apply 8% to cover yourself as a business from the end of the latest year assessed to the end of the year of assessment, in respect of which the provisional tax is being calculated and paid. And this one is easy because you know, after first of all, you know how much are you going to pay because you've already done the calculation. Then this is an example. The 2021 assessment is received on the, look at this, it was received on the 12th of June 2023, meaning that it is more than 14 days because from the 12th June to 31st of August, it's more than 14 days. That's why it says that taxable income is 150. For the 2024 assessment, the 22 assessment will be used. 2022 is 150,000 times 8%. 150 times to 8%. Here is until 2024 because it says for 2024 year of assessment. Look at this for the 2024. If it was for the 2025, look at this. If it was like this, then meaning that we are going to increase here to say 2025. Again, 150, 1, 2, 3, multiply by 8%. Again, it will be 12,000. 1, 2, 3. Meaning that it will never be 36, it will be 48. 48,000. 48,000 plus 150. Then it will be about 198. 198. Look at this. It's 8, 16, 24, 32. Here it will be 32. 32%. Then it will be 48,000 plus 198. That will be our basic amount for the 2025, because for 2024, the basic amount was about 180 something. But because we are doing it for the 2025, then our basic amount will be 98. It doesn't matter whether it's 2024 or 2023, as long as you know the principles. Then let's look. It says, in calculating the basic amount for a company, you must exclude the taxable capital gains. It's what I've explained in the individual provisional tax to say the basic amount does not include taxable capital gains. It does not include lump sum retirement benefits. And our question, most of our question, if we ask this kind of a question, it will appear like this. Company's basic amount, taxable income for the year ended February 2025 is 260,000. And it says, in this amount of 260, there's 30,000, which represents taxable capital gain, meaning that your basic amount will be 230 because it will be 260,000 minus 30,000. That's why I've explained, guys, that there is somewhere or the, where a basic amount can be given. In this instance, a basic amount has been given, but they say in that amount, they say 30,000, which represents CGT. Then if that's the case, you take 260 minus 30,000 is 230. The second step is to apply the flat rate for companies, so of which is 230 multiplied by 27%, and you divide by 2. Then you come to the first provisional tax payment. That is very simple in terms of companies. Let's see the rules. It says an assessment received less than 14 days before the due date, 31st August, in any years of assessment, use the previous year's assessment as the basic amount and adjust by 8% for each year going forward. This will also cover the 18 months rule. Yes, because look at this. The 2022, 23 August 2022, we cannot use this assessment. It's 8 days, and the 2022 assessment is 90,000. Then it says 90,000 multiplied by 24. Why 24%? It's from 2023, 2024, 2025. It's 8, 16, 24%. Then when we add 8% for 90,000, it's 21,600 plus 90,000, it will be 111,600. That will be the basic amount. Then after you've got that basic amount, you multiply by 27%, you divide by 2, then you get to the first provisional tax payment. What happens if an assessment is more than 14 days before the due date, the 31st of August, in any of the years of assessment? It says use the current year's assessment as the basic amount and not 8%. Because you've got the actual figure, meaning that that assessment, it has long been received. It's not a fresh, a new assessment. It is more than 14 days. Therefore, you can use that current and you don't at 8%. Look at this. An assessment received on the 15th. From the 15th until 31st of August, it's 16 days. Can you see? And the assessment is 90,000 for 225. So we don't have to adjust because we use the current actual amount. Because this assessment has been received more than 14 days before the due date. We take it as it is, 90,000. Then for the 2025 first provisional will be 90,000 multiplied by 27% is 24,300. Therefore, our basic amount is 24,300. Then the next step is to calculate the tax on that amount, of which is 27% multiplied by 24,300. You get whatever the amount, you divide by 2. Then you get to the first provisional tax payment. Very simple and straightforward, guys. Then what happens to the second provisional payment calculation? We said we use the estimated taxable income. It doesn't change even under companies. It's the same as in the individuals. Use the total estimated taxable income, the tax on that, deduct the first provisional, then you come to the second provisional tax payment. Let's look at in the form of an example. They say the estimated taxable income for 2025 is 500,000. And the first provisional tax paid is 80,000. Remember, here we are calculating the second provisional payment. Step 1, you take 500 multiplied by 27%, of which is 135,000. Deduct the first provisional tax of 135,000. Minus 80,000, of which it represents the first provisional tax. Then you come to the second provisional tax payment. Can you see, guys, how straightforward, how easy it is? It's the same as the first provisional tax payment under individuals. The second, they operate the same. The difference is with the tax rate, because the steps are the same. Then again, we have the two-tier system, which only happened under the second provisional tax payment. And I've explained, guys, if this kind of question has been asked, it will be asked as follows. Calculate or determine the underestimation penalty. Then you know, under the estimation penalty, you have to look whether that particular individual or taxpayer earn a million or less, or a million and greater or more. Then you know what to do, but we'll again see what the calculations looks like under a person earning a million or less, and a million, and a taxpayer earning a million or more. They say this is a percentage-based penalty imposed if the final provisional tax estimate for the year is understated. Only if there is underestimation, then you apply this two-tier system. And again, you'll be guided by the question, of which it will be either calculate or determine the underestimation penalty. Let's look where a person earns 1 million or less. Look what it says. It says the penalty only applies if the estimate of taxable income is less than the law of the following: the taxable income and the basic amount. Meaning that we need to calculate these two, taxable income and the basic amount, and see whichever amount is the lesser, and we are going to work with the lesser amount so that it can, or we can impose 20% as underestimation. And again, under the first, the person that earns a million, we need to apply 90%. The same process that we've used under individuals. Then a person who earns a million, the estimate of taxable income will only give rise to a penalty if it is less than 80,000 or 80% of the actual taxable income for the year. For example, if a company's taxable income for this 1,500,000, and it estimated its taxable income of 900,000, and such estimate was not seriously calculated, the additional tax is as follows. Assuming that the provisional tax actually paid for the year was 252,000. Look at this calculation. This person, remember, two-tier system is where two taxpayers, one earns a million or less, and one earns more than a million. That's why it's two-tier system penalty. Then it says, if a person taxable income is 1.5 million, what you will say is normal tax on of the actual taxable income is 1.5 multiplied by 80% multiplied by 27%. Look at this. There is a mark for this. We have identified. Look at this. There is a mark for this. Can you see? Let's go back. It messes up my calculation. They say 80% is a mark, it's a principle, because you have an idea that if a person earns more than 1.5 million, that person is entitled for a percentage of 80% and 27% a flat rate for companies. It's 1 mark for 80%, 1 mark for 27%. Already you have got 3 marks. Tax on estimate on 900,000. 27%, then there's a shortfall of 81,000, of which there's additional tax of 20% on that shortfall. Look at this. And even in the exam, guys, this is 5 marks. It's 2 marks, 80%, 27%. It's 1 mark, 900 times 27%. Is 1 mark for 20%. As long as it's a shortfall, you have to apply 20%. It's a free marks on this one. Then let's see where a person earn 1 million or less. Remember, you have to calculate the law of the basic amount and the taxable income, and you use whichever amount is the lesser. Look at this. Normal tax on 90% of the actual taxable income, because this person earn 900,000 times 90%. Can you see the difference between 90% and 80%? 90% is where an individual earns a million or less. Yes, less than a million, that's why it's 90%. But if it was more than a million, it's 80%. Multiplied by 27% is principal mark. Then 37% on the basic amount is 175,500. Tax on shortfalls, 43,200. And the additional tax on the shortfall, 20%, is 8,640. Can you see, guys? This is very straightforward in terms of companies. Let's see the third provisional tax payment. As I said previously, that the actual taxable income for it will be given to you. That's why you take that actual taxable income, multiply by the flat rate tax for companies, 27%, less the first provisional tax payment, less the second provisional tax payment, and you get to the third provisional tax payment. Let's see in the form of an example. The actual taxable income was given as 250,000. And the first provisional tax that was paid is 20,000. The second provisional tax that was paid is 30,000. The first step, because we are working on the actual taxable income of 250, the tax on it is 7,500. You less the first provisional tax, you less the second provisional tax, then you get to the third provisional tax payment. Then, guys, we are done. We are done with provisional tax on companies. Okay. Oh, there's some questions in the chat box. Let me just look at these questions. Can you see? Okay. No, is it transcribed? Okay, I thought there is some questions. Okay, NS, let me just unmute you. Let me just unmute you. Allow the camera for you so that you can ask a question. Yes, you can unmute yourself.
Hi, sir.
Yes.
Can I ask, when are you gonna get our scripts?
Wait, Wednesday. Okay. Let me just, before and I answer you, let me just do this. So it will be Wednesday and Thursday. I'll put an announcement.